So thank you so much for both joining me. Mel, I'll start with you. Let's start off with the health of the consumer right now, because we've had debt to disposable income once again creeping up 76.3%. Concerns around growth, concerns around the impact of inflation. How would you describe the South African consumer in light of all this?
The South African consumer is still alive and well and spending. It doesn't mean necessarily reckless spending, but certainly what we've seen through our shopping centres is a steady flow still of people and a steady spending pattern as well.
In which shops? Which shops are benefiting?
Certainly will give you a bit of a flavour of that in terms of stating that it is not a particular category. So one can't turn around and say that retailers that offer a lower price are the pure beneficiaries and that those that sell goods at a higher price are not selling goods. The reality is that, as you know, luxury is doing particularly well, both in South Africa and worldwide. And that what the consumer really is looking for is value. Value in that regardless of the price they pay, if the experience that they have melds with the price in terms of a value proposition, they are then happy to partake. To really hone it down, the retailers that are doing well are those that are very proactive in their businesses, understanding their customer base and not waiting for it to happen. And that's been interesting. In other words, if you're working hard for your money, you're still making money.
Yeah.
And that's quite interesting as to what we've seen come through recently.
And you're also seeing all these international retail brands coming into South Africa. You've got Zara, if you're just looking at, I suppose, Sandton City. Wow. Zara, you've got, who's the latest ones that have come to the fore?
The reality, as you say, is that as the owners of Sandton City together with Pareto, one of the elements that we're fortunate enough is to be an entry point for a lot of these wonderful brands and for the local flagships of our major retailers who are phenomenal as well. But Zara have come in, Cotton On, which is an Australian brand, which has created a very good value proposition in South Africa, is a huge success story.
Well, what is your assessment, Matthew, as to kind of the driving trends that we're seeing here in South Africa in the retail space?
Okay, I suppose I would look at it from a macroeconomic perspective and look at where we're at in the country at the moment. The Reserve Bank's GDP growth forecast is down a little from 2.7 to 2.6% for the year. Inflation should be range bound between 5 and 6%, propped up a little bit by food inflation and potentially by a little bit of a fallout from wage demands and strike actions. The Rand, you've seen unlimited bond buying statements from the ECB, twist and quantitative easing 3 potentially coming out of the States, as well as South Africa being included in the City Bond Index, which I think will have the net effect of a lot of very cheap money flowing into South Africa, searching for yield both in South Africa and all emerging markets. And I think that that'll have the effect of propping up the Rand. So I think that you'll take that element of uncertainty out of the inflation mix. The unemployment rate has come down a little bit, but not too meaningfully, from 24.9% to 24.9% from 25.5% this time last year. And essentially what that means is that from a monetary policy perspective, our expectation is that interest rates are going to remain the lowest that they've been post-World War II for a very long time. I think that government has chosen to be purposefully vague on their outlook on what interest rates will look like. And I think that with a political leadership election in December, I don't think that any major decisions are going to be made to bring unwanted, unpopular attention to government.
Yeah.
What that means for the consumer is that they have more money to spend.
But I mean, let's talk about the unsecured loan space. It's still only 9% of total credit, but a lot of hype around to what extent people are taking out money for discretionary items and to what extent they're spending it on building a new home or education. Is it something that you look at all, Mel?
Well, we do. I think where we were concerned is where credit started to extend to elements such as food. And that's not an item that should be bought on credit necessarily.
So then, are we going to raise red flags about this, Matthew?
Well, I think a more staggering statistic is probably that unsecured lending has increased 38% quarter on quarter since 2007. But as you say, at 9%, it's not an unrealistically high level. I think you need to, when looking at the unsecured lending question, look at the kind of 3 tiers of income earners in the country: your high income earners, your middle class, and your low income earners, and see who are most affected by it. Clearly, the lower income earners have a higher appetite for unsecured lending and have a higher requirement for unsecured lending in order to cover both some elements of shortfall, but also the modern consumer society offers many temptations. And conspicuous consumption in South Africa is something that I think will be around for a very long period of time, and unsecured lending, I think, will continue to grow for the next 2 to 3 years and probably just level out. I don't think it's an unrealistic bubble level.
Well, thank you both for coming in and providing some color to this discussion. Appreciate your time.